Good evening to all our mentorship traders. Friday evening, the end of the week interaction. We are on the 20th of November 2020. And it's good to have you online. We'll interact, but before that, first I welcome all our new community members. First few minutes, we'll talk about the index, the view on the market, and then as always, we'll take up your doubts, questions, and the prospective trade for next week. So here I am using tradingview.com. The levels, the studies are all there week on week as we progress. The daily chart of Nifty future, and I would like to extend this info line a little further just to figure out the size of the recent up move rally has been 12.5%. The last one was in the tune of 11%, and before that in the range of 17 and 19%. So I have only drawn those where it has been one-way rally without any sign of correction. Index at a life high. So let's talk about first from the weekly perspective. Let's do a top-down approach like we always do. So index at a life high, and if you remember, we spoke about the index dealing with this channel border top, this big blue beautiful rising channel which holds from the lows of 2008. It holds the highs of 2018, holds the highs of 2019 twice, and now 20. Three different channels, and the resistance from these three different channels were in the zone of 12,500 to 13,000, 12,900 here, and that's exactly where the index is trading right now. So from a medium to long-term perspective, we are dealing with some simple channel border resistances. The momentum over here, down here, I'm using the 9-period relative strength index. Do not offer any immediate negative divergence. We have a mild intermediate divergence, but apart from that, it's the channel border which is important. The index has moved up quite sharply, and it'll be interesting to see whether it will show that kind of strength going forward or not. For that, we come down to the daily time frame. Nothing much with the price momentum down here, so I'm going to straight away focus on price here. So we have close to a 12.5% one-way rally. So far, so good. We did see some amount of short-term intraday weakness yesterday. That was 19th, and today we did see a bit of recovery. Now, one thing I would like to see here, I would like to bring your attention is are these two days, which is Wednesday and Thursday. Highs are more or less very close to each other, which is close to that 976, 975. So that's going to typically walk as the immediate resistance for you. And today's low, which is 12,744, you can use 12,740, 700. So 12,700 is going to act as the immediate support from a short-term perspective next week. Broke of these two lows will definitely confirm that the index wants to correct. The highs, if they are taken out, might be used for profit booking, might be used for investors to take out, traders to take out profits. So I would suggest strategically not to be get carried away and buy at 13K the market. It's always better to buy when others are not buying. Apart from that, there's not much signals per se from the daily chart, but it's the 75-minute chart of Nifty futures which gives us a little bit more information. So the levels which I told you right now can more or less corroborate with this simple rising channel, the blue color channel over here. A break of this channel border on the downside is the 12,750. You can clearly see how 12,000, how these levels more or less beautifully matches with these highs. So that's a typical sign of a nice uptrending market where lows tend to become highs. On the other hand, in the bear market, highs tend to become lows. So so far so good. Only a break below this will confirm any kind of short-term weakness. Short-term weakness, I use the word short-term weakness because we've got multiple zones of support, which will help the index not to correct significantly. There are multiple runaway gaps. There's also a beautiful zone at 12K where we have multiple highs, and those highs, that typical level of 12K was taken away by the index with the help of a breakaway gap. This was a breakout gap. And so on the downside, one should not be too much worried. It's close to 12,400, 12,000, and there are multiple zones of supports. On the upside is the channel border on the upside, which is 13K and above, where it might find some resistance. But this is from a short-term perspective that we should look at. Strong, resilient market, momentum intact. Very minor signs of correction we did see just one day, and we've got some amount of bounce back today. But I think the daily chart, and if you zoom in, the lows of the recent 2 days and the highs of Wednesday, Thursday, these are the important levels. Below this, of course, the index decides to share a bit of short-term correction. And I think above this, the psychological 13K mark, do not get carried away. Short-term traders is fine, but do not tend to create any long-term, medium-term, long positions at this level. So cautiously bullish, I think, is a better term, and should not look to go short unless you have a very strong setup. Let's look at the Bank Nifty. Now, this is a one which can correct a little bit, which can bring the index down because it's dealing with a very important fib resistance. If you recall, we had drawn this, we have kept it. This is a daily chart of the Bank Nifty. The 76 and the 78 Fibonacci retracements. And these retracements more or less coincides pretty well with the short-term support here. So support can become resistance. If that happens, then there's a sign of a slightly weaker market. Nevertheless, the index is underperforming the benchmark Nifty, that we know very well. But a short-term correction makes more sense. If you look at the 75-minute time frame of Bank Nifty, you might tend to see shoulder, head, and maybe, we don't know, maybe a right shoulder kind of a formation. But a simple channel over here also makes sense. I generally draw these channels with the help of a line chart and with the help of relative strength index. And I draw them like this on the closing prices. Tend to work much better than channels drawn on highs and lows. So this is the channel on the Bank Nifty, which mirrors with the channel on the Nifty that I had shown you. And so the levels to work for Bank Nifty is 28,600, 28,600, 500. It's at the midline of the channel, and on the upside it's 29,750. 30K, like 13K on Nifty, it's 30K on the Bank Nifty. It looks like both the indices are eyeing a round number for itself, 13 and 30. So we'll see which way the market takes us, but in either way, especially on the upside, I would say, do not get carried away and go long aggressively. I think it will be a good opportunity to book some profits. This has been a very good runaway market, and it will give us good opportunities to book profits. On the Bank Nifty, we have a pretty decent price momentum divergence. If you can clearly see here, it exists. which is not there on the Nifty. So these are signs of detours. These are signs of consolidations. They can lead to corrections, but they generally lead to a signal that this is not a good price and time to buy. They can go range bound and then rally, or they can correct. If the index decides to correct, if the overall market decides to correct, I think it will be the Bank Nifty and its constituents which can bring the index down, which will bring the index down, at least in the short term. So cautiously bullish remains the stance. And if you're looking to do some contrarian shorts, mean reverting shorts, then I would suggest you can eye the banking space. You need to be brave, but yes, if you got a good setup, then why not? In terms of percentage changes for the day, it's been a decent day for the index. Financial services is another index which is at the top, and it is showing a bit of divergences on the top as well. So Bank Nifty, financial service, as well as overall market, if you notice, the last 2 days, Thursday and Friday, these two lows are more or less very close to each other. If not, in few cases, they're exact. So a break of these lows, and yes, you are heading for a short-term correction. That might be counterbalanced by the IT. Now, IT is kind of creating a range-bound behavior, stuck within a symmetrical triangle, kind of a pattern over here. Now, symmetrical triangles are primarily continuation patterns. So if you consider this as a downtrend, then ideally they should break down. But I'm not going to buy this. I'm not going to buy this because I think that the IT will show some strength if the market decides to correct. That needs to be seen, primarily because of the fact that the weekly charts of IT are exceptionally strong. Very, very big outperformance. If you can see here, I have the relative strength compared to the Nifty. FMCG, weak, but on the verge of a breakout. This is, again, the index which is eyeing the 32,000 mark. This. One stock you can keep a watch is Hindustan Unilever next week. The stock is trying its best to come out and move into an uptrend. You will find that in the weekly and daily charts. They have corrected for the stock has corrected, I think, for 5 or 6 consecutive days, and it is, I think, ripe for a short-term bounce back. There's a small cap at resistances on the highs of Jan 20, this year's high. Bank Nifty, we have spoken about. PSU banks, I think, not too sure if we discussed at length. I think we discussed this on our Wednesday's live market session. Huge difference between the behavior of private banks and PSU banks. PSU banks are big underperformers compared to the Nifty private. You can see very clearly where the Nifty private stands in comparison to its December Jan highs. This is the private bank, Nifty private bank, which more or less is similar to Bank Nifty. And if you look at the CNX PSU bank, this is where it is right now, and this is more or less the December Jan highs. Not to forget that it's in a huge downtrend. So PSU banks, stay away from it, and one stock you can look to short if you get a good divergence kind of setup would be State Bank of India. Small and mid caps are doing well. Metals have done well, but it's at resistances at these levels, these lows becoming highs. I can draw them. In fact, what I'll do over the coming week is I'm gonna spend some good time and create all these zones in all the sectoral, all the sectoral indices. It will be easier for us when we talk about the market. So autos behaving the same. As auto showing some strength thanks to movement that came in from Maruti. There you go. If you notice something, you'll see down here, if you notice the relative strength behavior of auto and metal, they are the two sectors who are trying to come out after a huge span of underperformance. If you go back to our market analysis during the month of March, Feb and all, we've been talking about that the two new kids on the block would be something like metal and auto. I'm so happy that they've played out pretty well. They are at crossroads right now, so it will not be as easy as it has been before, but I think they are the ones which can continue to lead for a better half of next year. That needs to be seen. Real estate did see a nice move thanks to DLF, but still it's underperforming. You can see the relative strength being 0. But yes, we can get some trading bets. I only track DLF over here, so won't be able to comment much except that. Energy is tricky. I use the word tricky because Reliance is not looking that great. It's been quite wobbly. OMCs are in a downtrend and the medium to long-term downtrend and are at resistances. The Nifty Energy Index per se, as you can see here, is at resistance. So don't see much happening here. Pharma. I think we did talk about this. This is the weekly chart of Pharma. This is a daily chart. You can see this huge consolidation. So taking its time, but I think Pharma and IT and FMCG, typical movement can come from these three sectors if the index corrects. What I mean to say is, if the Nifty breaks these 2-day lows, and if it comes down, let's say, let's draw a prospective case. Okay, so let's say if the Nifty breaks 12,750 kind of levels, and if we see ourselves close to 12,500, 600, 500, 400, I don't know, but let's say 12,500, that is the index. I think we have a new tool that they added recently. What was that? There was a little bit of background noise. Sorry for that. So I can't find that. They had added a new tool which I was using. They've taken it out. I'll just spend just a few more seconds to find out, or else I'm not gonna waste much time. Anyways, I can't find it. So it gives us nice arrows one by one after the other, which helps to draw them. Can't find it right now. Nevertheless, so what I'm trying to say is, if we find ourselves in this kind of a movement, if at all, then I feel this fall will come primarily from the banks, financial services, which are stretched and have created some amount of negative divergences. And those which are consolidating are primarily IT and Pharma. We found these two sectors consolidating. And these are the two sectors which are which actually led the movement from the bottom. So they are the ones which can support the index. Stocks like TCS, Infosys, Sun Pharma can support the index. FMCG would be still something which does not have the strength to support the index, but maybe not fall as much. So that's my take on the Nifty, the Bank Nifty, and the sectors. Cautiously bullish. Break of lows of Wednesday, Thursday, Friday, Thursday, we'll see some amount of weakness, if at all. If the index finds itself up to 13K and Bank Nifty at 30K, I wouldn't ask you to get carried away and buy. Short-term traders, intraday traders, of course, you should and you can, but long-term, medium-term traders, investors should not get carried away. The last time I checked, the Nifty PE was close to 34. That's never ever have you seen the Nifty PE at that kind of level, but Nifty PE for the last, I think 18 months has been close to the 2 standard deviation. The reading of 25, 27, 28 has been fairly normal over the last 1.5 years. So the index vis-a-vis its PE is creating a new norm for itself, but still 34, 35 reading is quite steep, and asset allocations will start to kick in. So please do not go equity heavy. In fact, go equity light. Okay. That's it. So I'll end my session here for the index views. We'll now move ahead and talk about your trades and the questions that you have. So let's begin.